Bitcoin prices went up by more than 200% this year, and just last week it broke all-time high record and reaches as high as 23,000 per Bitcoin. In this video, we will discuss about Bitcoin in more details, and hopefully it will help you make a decision whether to buy a Bitcoin or not. We can spend a lot of time to discuss whether Bitcoin is a superior form of money compared to cash and gold, but in my opinion, this is not the reason that we should own Bitcoin. The main driver that drives Bitcoin prices over the next couple of years will be supply-demand. The supply equation is actually quite simple because there's only 21 million Bitcoins to be mined eventually, but the demand for Bitcoin is the question mark. In the subsequent sections of the video, we will discuss about what is driving the demand and whether this will able to push Bitcoin price to a higher level. I'll go through a couple of reasons why you should own Bitcoin and why you shouldn't own Bitcoin, and we will discuss them in more details. Reason number one to buy Bitcoins is because it is still early to buy Bitcoins now. Let's look at a couple of big tech companies in US right now. For example, Amazon was founded 26 years ago, Google was founded 22 years ago, and PayPal was founded 21 or 22 years ago. And even for Tesla, which is a new company in the automakers industry, it was founded about 17 years ago. Facebook was founded 16 years ago, and Square was founded 11 years ago. And how long has Bitcoin been existed? The ledger for Bitcoin was started in 2009, which was only 11 years ago. So given that Bitcoin has only been invented 11 years ago, it is still now in the early phase. So people will ridicule it, and people who don't understand Bitcoin will try to make fun of it and just don't believe the story. So it will take time for people to slowly adopting Bitcoin, and more people adopting Bitcoin, the value will increase over time. And I know some of you are concerned about the Bitcoin bubble in 3 years ago, but comparing the recent price hike versus 3 years ago, we can see that in Google Trends, Bitcoin has actually not been mentioned quite a lot. So it shows that the FOMO is not as high as 3 years ago, hence there is more runway for Bitcoin prices to go up. Next, let's look at the market cap of the asset class. Bitcoin market cap is currently about 400 billion US dollar, and if you compare it against gold, which is about 10 trillion, and even larger market cap for fixed income, which is more than 100 trillions of market cap, you can see that there's still a lot of potential for Bitcoin to rise in the future. The next reason to buy into Bitcoin now is if we compare the Bitcoin market now versus 3 years ago, there's a lot more institutional money buying in. Let's go through a couple of examples. So Square in October this year announced that they have purchased 50 million worth of Bitcoin into their treasury. The reason they bought into Bitcoins is not for speculation purpose, but it's because they believe that Bitcoin has the potential to become the currency in the future. The software company MicroStrategy also announced in December that they are buying into Bitcoins. So similar to Square, they have invested 50 million into Bitcoins in December, and then 1 week later, they raised 400 millions of convertible debts to take the money and use it to buy more Bitcoins. An insurance company, MassMutual, is investing 100 millions into Bitcoins. You know, this is quite funny because usually insurance company is the companies that is moving very slow. They are not really good at adopting technology, maybe except for Lemonade. You can see that when insurance company starting to invest into Bitcoins, it just shows that the adoptions for Bitcoins is increasing over time. Also, another news article in last week, the CIO of Guggenheim, Scott Minerd, just said that his price target for Bitcoin is 400,000. So this kind of bullish statement or very high price target actually will help push Bitcoin prices to a much higher level. So Scott Minerd is not like someone that's nobody. He's actually the member of Federal Reserve Bank of New York Investor Advisory Committee on Financial Markets. He's also an advisor to the OECD and contributing member of the WEF. So when people like this start talking about Bitcoin, we should pay attention. So the next reason to own Bitcoins is because we can use Bitcoin to avoid the dilution that caused by increase of money supply. All the money in this world is not a constant quantity. The chart that I'm showing on the screen now is the M2 money supply. So the quantity of money increased slowly over time. However, because of the coronavirus crisis, government actually spent a lot of money printing money in order to give stimulus. This will significantly increase the money supply. And it's quite obvious from the chart. Before the COVID crisis, the money supply reaches as high as 15 trillion. After a couple of stimulus deal packages, the money supply just shoot up a lot. And when there's more money chasing limited quantity of goods and services, the prices will shoot up. Although we haven't seen this in traditional inflation figures, but just look at the asset prices. For example, like stock market has went up quite a lot since early this year, and property prices also has been doing quite well. This shows that there's a lot of asset inflation. By buying into Bitcoins, you can also avoid this kind of dilution. And while I'm recording this video, the US Congress is discussing about the next stimulus package, and the 900 billion stimulus deal will further increase the money supply. The next reason to buy Bitcoins is because of the distribution of the outcome. In my opinion, Bitcoin prices, let's say if we just look long enough for 3 to 5 years, the distribution of the outcome is something we call fat tail distribution. What it means is that the probability of Bitcoin shoot up to a very, very high prices is quite probable. So for investment that have potential to shoot up by 3x, 5x or even 10x, to me it is a good investment. Okay, after go through a couple of examples to buy Bitcoins, let's discuss also the reason not to buy Bitcoin. Of course, the first reason not to buy Bitcoins is because the volatility of price is very high. Just look at in 2018, after the peak of the Bitcoin prices, the price just fall by 70%. Imagine that you are investing 10,000 into Bitcoin and it just left with 3,000 after a couple of months. Then in late 2019, the Bitcoin prices fall by 50%. So this kind of price movement for Bitcoins is just a normal fluctuation. So understand that Bitcoin is a very volatile asset class. So you have to really limit your exposure, don't overexpose to this asset class. I think general of thumb is that please don't hold more than 5% of your assets in Bitcoin unless you are extremely bullish about this asset class and not just chasing high returns. And you may ask why Bitcoin prices is so volatile in the past. So one potential explanation is that Bitcoins is still subject to heavy manipulation by the big owners. Even the recent price hike, we don't really understand why it has went up so much. It could be due to institutional money keep buying Bitcoin, hence pushing up the prices, or it could be because of there's a lot of manipulation in the market. And just to give you an example, after the Bitcoin bubbles in 2017, 2 years later, there's news article came out to say, actually 2 years back, there's a lot of price manipulation in Bitcoin market. So it just shows that we don't really know if there's manipulation at the moment. I know there's a lot of bullish argument for Bitcoin. Some of them I think is valid, but some of them, in my opinion, is not really valid. So we will go through a couple of examples here. The first example is that people say, okay, you have to own Bitcoin because the supply of Bitcoins is limited to 21 million. For example, look at this article from CNBC. Bill Miller, which is a very successful investor, he mentioned that there are 47 million millionaires out there. If every one of them want to own a Bitcoin, then there's just not enough Bitcoin for all of them to own. Sounds good, right? Because buying into something that is scarce seems like a good idea. However, is Bitcoin or cryptocurrency something that is rare? Please bear in mind that there's hundreds or maybe even thousands of cryptocurrency out there. Let's contrast Bitcoin versus, let's say, a stock investment. If you say Bitcoin is attractive because the quantity is limited at 21 million, then I would say that you should go and buy Berkshire Hathaway shares, because Berkshire Hathaway outstanding shares is only 1.564 millions. It's even more scarce than Bitcoin. And even better, you know, Berkshire Hathaway is making money years over years. Sometimes they will use their monies to actually buy back their own shares. Bitcoin's 21 million will stay 21 million, but for Berkshire Hathaway shares, it is decreasing over time. So if we argue from this perspective, then you should go and buy Berkshire Hathaway shares and not Bitcoin. The next argument is that there are more businesses are accepting Bitcoins now, so you should buy some Bitcoins. Let's talk about the payment in more details. Actually, if we compare Bitcoins versus, let's say, Visa or cash, the scalability of Bitcoins is always an issue. You see the graphic that I'm showing here? The number of transactions that's supported by Bitcoins is about like 7 transactions per second, whereas for Visa, the limit is at 24,000 transactions per second. So it just shows that if we are comparing the scalability of Bitcoin versus some of other payment methods out there, other payments is even better than Bitcoin. So this is definitely not a reason for you to own Bitcoin. So I hope that the material here will help you make an informed decisions. For me personally, I have bought into some Bitcoins. It is a very small percentage of my total assets. So even if Bitcoin prices just crash by 70-80%, it will not have a huge impact to my overall portfolio. So for you, I would suggest that you can do a bit more research, try to understand this asset class and make a decision yourself. Remember to do your own due diligence. That's all about this video. Bye.